Hey everyone, Dennis here with a portfolio update. Today we're looking at my dividend investing portfolio with M1 Finance. You can see right over here I have it nicely named Dividend Dennis because I like focusing on dividends, and we're going to talk about those today. We're going to talk about what we've earned so far for the month, as well as kind of take a few looks at some of the different stocks in the portfolio altogether. Now, you can see right over here, we have a total value right now of $18,148 in this portfolio. And currently, if we actually show this right over here, if we go to our current one-day tab, as you can see here, we have a gain of $56.55. And then if we kind of continue on from here, we can see in the last week, it's $437 in gains. Of course, this is money weighted return, so keep in mind that also does include earned dividends. I'll show you guys unrealized gains here in just a moment. And then you can see right over here with our total gains for the last month have been over $1,124. If we go to the last quarter, it's been $1,578. And then if we go to the last year, that is $3,084. And then let's go to our all-time tab, which is $3,157. Now, that's pretty exciting. Of course, if you take a look at this chart right over here where it says value over time, and I don't know how to make circles apparently, so let me just redo that part right there. So it says value over time. This is really critical because for a lot of people, 18,000 might seem like a lot. But keep in mind, I started this account with about $100 in here, and then I was just slowly investing over time as I felt more comfortable understanding what I wanted, how I wanted this portfolio. And then it just started, jumping up. I felt more comfortable putting in money. And then you just see this account growing massively over time. But again, this was all just me staying with the flow of, investing regardless of there being ups and downs. Actually, when there are downs, I tend to want to invest more. That's just my preference and my investing style. But just something to honestly keep in mind when going through this process, because I think everyone's a little different in what they kind of want in their portfolio, how they want it. I've done videos here on the channel where I show you guys every single stock that I have in all of my different slices here, so my overall portfolio. And then if I actually go into my holdings here, two things. One, I have 28 positions in case you're curious. I can't draw circles today for some reason. So I have 28 positions total. And then for anybody that's wondering about my unrealized gains, I'm up positive $2,548 exact, which is 16% growth. Obviously, that is only if I sell today, that's what I would be earning because it is unrealized at that point, just in case you're curious about that. And if we look at all of our stocks, if we kind of click on here, currently I have Tesla as my number one gain currently as far as dollar amount. So that's $679 in unrealized gains. Percentage-wise, I think they're also now the number one. I have Discover as a close second, though. You can see right over here, they're really, really close to each other. But the dollar amount's a lot less because I have less invested in the stock, which is fine. Didn't know that it was going to grow to that extent, but if I did, I would have invested more. I think we can all generally say stuff like that. But if I go here, let's look at my unrealized gains for like the worst ones. So right now we have DLR as currently down 1772 unrealized, which is about 3.68%. And then we got like Lockheed Martin kind of close behind there with $12.27. But nonetheless, I'm still investing in these companies, still wanting to, put money in even when they're down lower than what I originally started with, which is called dollar cost averaging, just because I see them for the long term. So if we actually go into my real estate tab here, we can see right over here we have DLR right over here, and we're down about 14.57 here because this also includes the dividends earned so far. So you can see I've earned 334, which means that my losses are less because I've earned something from this company. Real quick too, if anybody's curious, the platform I'm using right now is called M1 Finance. If you're not too familiar with it, it's what I personally love to use when it comes to dividend investing. I'll have a link for them in the show notes down below. It does help support out the channel, but it gets you started right away. The nice thing is too, if you have questions, let me know in the comments. I have a second channel where I do a bunch of tutorials, and I have a lot on this platform. But continuing on here, you can see, right now the stock price is 135 and my average share price is $140. So right now, if I bought more, I would be lowering my average share cost, which is great because if I believe in this company long term, that just means I'm getting it at a discount from what I originally paid for. So that's nice. That's not a bad thing at all. Plus, because we're dividend investors, right here you can see the dividend yield is 3.24%. I'm not just caring about the dividend yield. I do also care about other factors as well. I do have growth in my portfolio. I do have other platforms that I utilize as well too. Not just M1 Finance. I have Robinhood that I use. I also use an app called Public, and I'm getting more into that one as far as growth and like a little bit more risky stuff, but nothing to this amount right here, like that $1,800, nothing even close to that. So you can see here, this is my long-term growth right over here. If you follow along, like I said, with some of the other videos here on the channel, you might know these companies. So I got Tesla, Amazon, Google, and Facebook. So all of these ones I am holding on to for long term. And if we actually look right over here, we can see that currently Amazon, I'm only up 5% in comparison to all of these other companies, which I'm up, 20, 30%. So right now I've actually been buying a little bit more into Amazon because they've been kind of flatlined for a little while. And I still see them, having a lot of growth when it comes to their stock prices. Personally, I'm still surprised that they haven't done a stock split, even though it doesn't make a big difference anymore nowadays because fractional shares are a thing. So, I have like 0.21 shares. So I have like 21% of one share, but that's because their stock price is, $3,100. And I'm not willing to put that much into one stock when I have, a lot of other companies I want to have in my portfolio. So I'm pretty diversified. You saw I had 28 different stocks in total. So let's kind of go ahead and take a look and see what I've earned in dividends so far for this month. So if I'm here in my activities feed, I'll break this down for you guys here in just a second if I remember, which is my morning trade that I just recently did. So let's go ahead and break down our dividends first. So right over here, you can see on the first of the month, we got paid out from Aflac. We got paid out a nice $4.45. We got also on the first as well from Pfizer. We've had them for a while, so we have $2.28. And then also on the first, so 3 times in one day, we got paid out from Visa for a total of 51 cents. And then on the third, we got paid out from Discover. For some reason, it came in twice. But you can see here, combined total is $3.17. So a really nice chunk just from the very beginning of the month, which of course I'm reinvesting this stuff. For the most part, a little bit of it is going towards my borrow stuff, which that's just a whole separate thing. But the rest of it is pretty much getting reinvested right away. Which brings us into this page right over here, which is my dividend spreadsheet. So let's go ahead and kind of like zoom in a little bit here on that side. So right over here, you're going to be able to see that we're on M1 Finance. So this is my spreadsheet to kind of keep track of what I've earned so far in dividends and being able to, kind of just keep track of everything. Let me see if I could zoom in just a little bit more. Okay, perfect. So let me do this. So I'm just zooming in a little bit more so you can see it a little bit closer up on the side. So I personally made this myself. So if you guys are interested, I'll also have a link for that in the show notes down below. And that is completely free, just for you guys kind of supporting the channel here, watching and, hitting the like button and all that stuff. That's available for you for free. So you can see here so far for December, I'm at $10.41 for the month. Obviously, we've only had a couple of payouts so far, and I have a few more that I'm being paid out from. But if we just look already from what we made last year in December, we made $2.77, which was actually the highest month for that year. Because if you look at the year I just got started, so right over here, this is the highest month of earnings. But we already surpassed that by a long shot, and we still have a lot of companies. Plus, we have Costco in our portfolio, and if you remember or heard about it, Costco is paying a special dividend, so I'm going to get a nice $10 and some change because of their special dividend. So I'm going to already blow, obviously, December from last year out of the water, but I'm probably going to also maybe have this as my highest month. So we'll see. Let me know in the comments down below if you guys think that this will be my highest earning month. Of course, we'll do a recap at the beginning of next month, how much we've earned in total for this month altogether. So you can see here where it says quarter, this right over here, we're at $52.66 so far for the last quarter of the year. So we're just shy of about $10 from the third quarter in 2020. So we're for sure going to pass that just with the Costco bonus, or special dividend, I should say. But in total so far this year, we've earned $149.38 in dividends. So that's pretty substantial when you consider that the year prior we made $8.52. So we're definitely going in the right direction as far as increasing our dividends, making sure we get those payouts. But there's something I want to talk about when it comes to those payouts, and I'll mention that here in a second. But what I do also want to show you guys too is I'm kind of keeping track of what my average is. Obviously, there's a lot of people online that are talking about getting to a goal of $1,000 a month in dividends. Just because that's like a special number for some reason. I think it's just arbitrary for all of us. I mean, to be honest, I'm excited to get $1,000 a month. So I'm doing an average right over here. So I'm making about $1,245 a month because I have 12 months so far in the year, because that's the month we're in. So not too bad, considering that we're really getting started this year as our main focus for building our dividends. And then you could see here our total dividends that we've earned in the lifetime of M1 Finance is $157.90, which a bulk of it came out from this month, or this year, I should say. Now, like I said, $1,000 is kind of like the big goal for everybody. And I do want to get to that point, but I do want to surpass that significantly. And I've actually shared it before, and I'll share it again here too. I have projections that in 20 years, I'm going to draw 20 here. So in 20 years, I'm probably going to try to achieve way bigger numbers, $15,000, $20,000 a month in dividends. And the reason for that is because if I keep on focusing on dividend increases, that is going to have a huge implication on what I'm going to be able to earn. Because if you are like most people, that talk about dividends, what you really care about typically is going to be the yield, right? So we talked about DLR here, and right over here, you can see they have a nice 3.24 dividend. A lot of dividend investors want 3.5 to 4% as kind of a minimum. And that's not a bad thing. But usually when you get companies around this percentage, you're usually having a very low dividend increase year after year. And I'm cutting myself off there. So hold on, let me switch to the screen here. There we go. You guys didn't see that last part that I drew over here. But yeah, so this is kind of what people are typically looking for when they talk about dividends, or if they're new to dividends, they're looking at these numbers because a lot of people talk about 4%. But their dividend increases are very, very low. Versus I will focus in sometimes on companies that have a lower dividend yield currently, but they have a high increase. So let's kind of show you as an example. And I'm going to go into more detail, obviously, because that's what I like to do. So for example, here we have Lockheed Martin is at 2.65%. So it's a fairly lower yield. If you're talking about how much it costs you to buy one share and then you get, those dividends. Granted, you can do fractional shares on M1, so you still get the fractional dividends. So it doesn't matter the price point. It just matters about the yield. But what is really important is that this tends to have a higher dividend increase. It's not always a guarantee that because they have a low yield that they have a high increase, but it generally happens to be the case with some of the companies I focus in on. So we're jumping over here to seekingalpha.com. Let me see if I can switch back to zoom in a little bit more for you guys. Let me do this. So right over here, what we're going to do is look at Lockheed Martin as an example, because we were just talking about them. So Lockheed Martin, I'm going to go to our dividend tab over here, and we're going to see some information here. So we saw around their dividend yield, which was 2.84. I think it's a little different from the app right here. Yeah, so the app is behind a little bit. But right over here, you can see 2.84% dividend yield. So not the best for a lot of dividend investors because it is a fairly low number. But what I like to look at as well too is this thing right over here. It's called their 5-year growth rate. It's the dividend increases that they do. This is obviously a 5-year average. But if you pay attention to companies that are increasing at a high rate, that's good news, because that means you're making more money. And I'll show you guys exactly what I mean. So you can see here that their 5-year average growth is 10.39%. So what I'm going to do is go into what they call the dividend news, and this is where you can kind of get an idea of how they're increasing. So back in September of this year, they actually announced that they're doing a dividend increase. And so the way this works is if you either buy by a certain point or you own the company already and then already getting paid out dividends, this is going to go into effect. So the way they announced this is that they said that for shareholders on the record of December 1st, so the ex-dividend date is November 30th, which means November, technically 29th would be the last day you can buy into the stock to get this new pay rate. But I think that year, that was a Sunday, so it was like that last Friday you had to get in. And that's going to be payable on the 24th. And so what they said was that they are increasing their dividend to $2.60, which is an 8.3% increase from their payout before, which was $2.40. So effectively, what that means is that you're getting an 8.3% raise if you already own this stock, or if you buy it by that certain point, you're going to get that nicer pay raise. Now, of course, when they announce this, sometimes their stock goes up. And if that's the case, that means you're buying in at a higher price point for the stock, but then the yield is going to go down. So the yield is going down because of the fact that the price is going up. So they're like, on opposite ends of the spectrum there. But for somebody like myself, who, if we go back here just for a quick second, so with like Lockheed Martin, I own 1.13 shares. Not a lot, I get that. But the whole premise is that I'm investing slowly but surely over time, like we talked about. But what was happening was, because I own at least over one share, I was going to get $2.40 as a dividend payout. But because they did this increase on the 24th of December, I'm going to make $2.60. Well, it's going to be a little bit more than that because I have the fractional shares. But what this is doing is that's 20 cents more per share. This is the worst 20 cents I've ever seen. So 20 cents per share. Now, 20 cents is not a lot of money. Like, I get that, right? I can go look underneath, my couch and probably find more than 20 cents. But what this is showing me is that I didn't do anything more to make this 20 plus cents per dividend or per share that I own. I just am getting this because I already own the company, which is, again, an 8% increase. So for me, when I care about increases, this means that if they stay steady with their increases year over year, it doesn't always have to be 8.3. It could be a little bit lower, but at other times it could be way higher. What that's going to do is it's going to give me the opportunity to make more money without necessarily having to buy more into the company. Because as an example, if we scroll down here, I'm going to go far back. So I'm going to go into the past. So let's go all the way far back to April of, actually, no, let's do this one. So April of 2016, they declared their dividend of $1.65. So if you kind of take this into consideration, let's say you bought the stock back then, and then all of a sudden over the next couple of years, they do, 10% increase, 9.9% increase, 10% increase, 9.1% increase, but you haven't bought either any more stock or you haven't sold anything, everything is the same. And then just most recently got an 8.3% increase. Like, imagine that. Imagine getting an increase that amount every single year. So you go from $1.65 to $2.60. So almost a whole dollar extra per share that you're making. Now, because we have the one share, again, it's not going to be that big of a difference. But imagine if over time you had 10 shares or 100 shares or even 1,000 shares, that $1 starts bringing in a lot more money for you. So it becomes more apparent that these dividend increases are having an effect on your earnings because of the fact that they're going up every single year. There's this thing that a lot of people don't talk about called yield on cost, which is right over here. So yield on cost is effectively, if you buy the stock today, when they announced this dividend increase, the dividend yield was 2.69%. But because of the price going up or the price going down, that dividend yield can fluctuate. So I'm going to go ahead and click on here, and I'm going to show you guys exactly what I mean here. So this chart kind of works backwards, so kind of keep that in mind. This is present day right over here on this side, and then this is in the past going this way. So just kind of a heads up as we read this. So let me get my arrow here. So right now, if you bought in today, as of this date, because of the price fluctuations after they announced the dividend increase, the yield would be 2.84%. Not terrible, honestly. It's not a bad yield considering all things. But if we scroll back to when the market kind of went down back in early February or mid-February and March, you can see here at its peak, the stock price was all the way down to $276.80. They didn't change anything with their dividend. So you can see here, their yield on cost would be 3.76%, which means that if you bought one share over here on this date, with the current prices and everything, you would actually get 3.76% on your money versus somebody who bought today at 2.87. So, but let's kind of move back even further, right? Because if we go all the way back to, 2018, when, there was a downward trend towards the end of the year, you can see here their yield on cost was 4.24% because the stock price was $2 or $245. And then if we go all the way back to 5 years ago, you could see it was around 4 or 5%. And you're thinking, well, yeah, of course I'd buy it at 5% yield back in 2016, because that market was there, 2016, 2015. But back then in 2015, 2016, the yield wasn't 4.55%. The yield was probably closer to 2.5 to 3%. And the only reason it shows us here the yield on cost being so high is because of the fact that they had those 10% increases, the 9.9% increases, the 8.1% increases. So that effectively keeps their yield looking the same year after year because they want to keep around that same amount. But if you bought stocks years and years ago, those shares, because you bought them at a lower cost, are giving you a higher yield on your money. And to me, that's amazing. Let's jump to 10 years. Again, left to right. So if you bought this 10 years ago, obviously there was a dip here, but give or take about 10 years ago, you would be getting 15% on your money because their share prices were $68.84. That's mind blowing for me. 15% on your money every single quarter because you're or every single year, I should say, because you are getting paid out on those dividends because you bought them all the way back in 2011. And that's huge. But again, it's not like back in 2011, they had a 14, 15% dividend yield. What they did have was a actual, 3, maybe 2.5% yield. But then because of all those increases consistently over the years, that was what caused all of this to, be up so high. I mean, let's see if 20 years has anything different here. Look at this. This is insane. If you bought this all the way back in 2000, the cost per share was $33.70. Your yield right now would be 30%. So if you just bought one share of this company right over here, you're getting 30% back on your money every single year if you didn't do anything more, right? And that's not even including the actual growth of the stock itself, right? Because if you bought it at $33 and you sold at $362, I mean, you're making a healthy profit right there too. But that's all contingent on you having bought it at that time, kept it, let the dividends increase year after year. But then obviously it looks less compelling when you see it over here at 2.77%. But let's just say that for the next, let's go back to 10 years. Let me drop this. Actually, let me go back to 5 years because I think 5 years is a little bit easier for people to kind of manage in their head as far as opportunity. So if you bought into the stock today at 2.85% yield, and then in 5 years you kept buying in and you have the stock and everything, and then you're getting almost 5% on your money, that's better than having a 4% stock that doesn't have their dividends increase. And I'm going to show you exactly what I mean by this. So let's go ahead and go to Realty Income. So I have Realty Income in my portfolio. I do also like them. They're a REIT, but their dividend yield is really decent right now. It's at 4.5%. But if you look at their 5-year growth, it's only at 4.38%. So it's much lower on the 5-year growth, but it is much higher on their yield in comparison to Lockheed Martin, right? So if we go to the dividend news, we can see here, their most recent dividend increase was 0.02%. That's not even a full penny. That's like a fractions of pennies. If we keep scrolling down, again, 0.2% increase, 0.2% increase. Now, Realty Income obviously pays out monthly for a lot of people that might not know that. And sometimes they'll do random increases, but then they'll do bigger ones like this, which is 2.2%. So when you add it all up, the average is a little bit higher than what you see from these individually. So just kind of something to keep in mind. But yeah, 0.2%, they kind of do that on a regular basis. And then once a year or so, they'll go ahead and do that 2.2 or 3.3. So I want to show you here. So let's go to the yield on cost for Realty Income here. So if we do the same thing 5 years, right over here, you can see that currently right now they're at 4.59. They had this, really good couple of months prior to everything going down in the market. So their yield was getting as low as 3.48, 3.44, those kind of numbers. But if we look over the last 5 years, just like everything else, so this actually had a pretty good 5-year run at 5.62% yield on cost. So if you bought it 5 years ago, your yield would actually be 5.62, but that's not a vast difference between where it is today, right? If you remember with Lockheed Martin, there was a pretty big significant difference between the 5-year marker and where it is today. So let's go ahead and jump to the 10 years. So in 10 years, if you had bought it, you would be at an 8.41% yield if you bought it 10 years ago. Versus where it is now, which is 4.59. So again, in comparison to Lockheed Martin, it's not as big of a difference, because if you can be getting a lot more on your money with Lockheed Martin, why wouldn't you go that route versus having something like Realty Income? Now, there's different advantages and there's different reasons for people to go from one to the other, or having both. It looks like if you did 20 years would be really good, because you would be getting 23% on your money. That would be insane. I can only imagine what that would be like, getting 23% on your money on a yearly basis with Realty Income. But again, imagine somebody investing into this 20 years ago, and where they would be today. But the problem is, a lot of people see where it is today and say, well, 4% on my money is not worth it. 23% on your money is definitely worth it, but you have to wait that 20 years. And for me, I do understand that there's a lot of ways to invest money, and this is just one of the ways that I'm investing. It's not just dividend investing. I have plans for investing with real estate. I have plans in investing with businesses, but this is just one method to grow my money and have it for me, because I don't want these dividends to be paying me right now. My plan is in 15, 20 years to be able to get something like this where I'm getting 23% on my money. So if I go to trackyourdividends.com, this is a website that I use. Let me see if I can back out a little bit. This is a website I use. I'll have a link for them down below if you guys want to check them out as well. And you can see right over here. So this is actually a little bit behind right now. I got to update this from my regular portfolio. You can see that it shows 17,000. So if you add up everything that my portfolio is providing as far as the dividend yield, current to date, it is 1.96% dividend yield. But my actual yield on cost, because of dividends increasing and everything else, it's actually at 2.28%. Again, this is far below the 4% that a lot of dividend investors talk about. But because I'm in this long term and I'm not really using this money to actually reinvest this moment, this is my goal right now, is to essentially start with a lower yield, have companies that are increasing not just their dividend yield, but their actual growth as well too. So they have kind of on both fronts, but having both of them going up at the same time is kind of what I'm focused on. And seeing that obviously is going to help me grow, right? So I'm going to show you here in a second as well too, because right now my annual income rate estimated is about $346. So that is pretty good here. And then let's go to our future values over here, because this is kind of a cool thing to look at as well. Let that load up. So this right over here, this is obviously estimating that, like, if I don't do anything else, obviously you can see here. So I don't really focus on that. What I do care about is my 5-year growth average between all the stocks that I have in my portfolio is 13.2%. So what I want to do is to show you on a calculator right over here. So let's go to 13.2. So right over here, I'm going to start my portfolio. This is a calculator to talk about dividend reinvestments. So I'm going to show you what I mean about, obviously getting to $1,000 a month, which is going to be a great goal, but then getting to, let me do 1K. But then my bigger goal is to get to somewhere closer to like $20,000 a month in dividend income. So let's go ahead and plug some of these numbers in. So I'm sitting around $18,000 in my portfolio. I average about like 800 to 1,000 at this point, but let's just be a little fiscally conservative here and do 850 or so. So my annual dividend yield, you guys saw it was 2.28. Let me double check that now. Now I'm like second guessing myself. Hold on. Let's let this load up here. 2.28, yeah. So that was my dividend yield at 2.28. So my growth rate was 13.5. I'm going to be a little bit conservative on that and then just say that my average is 10% growth. And then my annual share price for growth on stocks are, let's say, about 9%. And then I'm going to invest for 20 years. We're going to go ahead and calculate this return. So We can see right over here that this year's dividends will end up being about $410. My total value around maybe $18,410, give or take, right? I can see that. That's a possibility. So we want to keep scrolling down. You can see the second year we'll be earning around $759 in dividends, then $1,214, and this is yearly, right? So consider that. So if we kind of scroll down here, we're talking about $1,000 first and foremost. So we're about year 9 or 10 estimated to hit there. My goal is maybe to try to get to year 8 to get over $1,000 a month. But realistically, let's just say it's between year 9 and 10 that I'll be making over $1,000 every single month. And you can see here my portfolio is estimated to be around $185,000 to $223,000. So pretty healthy amount in the portfolio and a pretty healthy amount in dividend payout. So, but again, I'm in this longer term. I want some of this money to be able to, essentially support my lifestyle in probably my late 40s or so, like maybe mid 40s to late 40s. That's kind of like the goal there. So if I keep scrolling down here, we can see in about 15 years. Actually, let me zoom in a little bit here. Makes this easier for you guys to see. So in about 15 years, I'm estimated to make about $45,000 a year in dividends. $45,000 a year in dividends. Like, that's a lot, right? So if we added this here, so let's just round that up to 45,000 divided by 12, that's $3,750. Now, I get it. Keep in mind, inflation's a big thing, right? This money is going to be worth less than it is today. But also, too, this is not going to be my only investment. I'm not going to just focus on this. But imagine getting $3,750 on average every month just from your dividends, doing nothing else. Now, my portfolio at that point will be worth almost $565,000, so really healthy amount there too. And then if we scroll down to the 20-year marker, check this out. Almost $200,000 in dividend payouts. A portfolio worth $1.6 million at that point too. So if we bring this up here, so 194,955 divided by 12. We're looking at this one with the numbers I plugged in today. We're looking at $16,246.25 monthly in dividend payouts, average, right? Some months are going to be higher, some months are going to be lower, but that's what's estimated for me for 20 years from now if I am steady with my dividend increases, which I roughly put in at 10%, which is lower than what I'm currently at. That's only me putting in $850 a month. If I can do more, that would be great. And then that's, of course, for the principal of the account, with a 9% growth. So mine is technically a little higher. I'm just being a little bit more conservative with these numbers. And then obviously with my annual dividend currently, it's at 2.28%. That's how I'm getting these numbers right here. So my yield on costs would be significantly higher. Actually, let me clean this up. Would be significantly higher with this $1.6 million in this portfolio. But what I think a lot of people misunderstand too is that if you take $1.6 million right now, 1.6 mil, right, and you invested that into the market today, this money would not equal this amount today, right? Because if you even got a 4%, dividend yield on your money, that wouldn't even be close in comparison to that $194,000 that you would be making every year. Like, not even close, right? So like if let me close this off. Actually, I could just do this. So let me just pretend that you have like $1.6 million to plug in right now, right? Let's say you're not doing anything extra. Let's just say you have a nice solid 4% yield. I'm just going to zero out everything else for a second here. So let me do this. So right now, if you invested $1.6 million, you would be getting a dividend yield of $64,000 a year. That's not a lot, right? For $1.6 million. So you're getting 4% on your money. You're not going to be able to do a lot with that. But, what happens is the fact that you're putting it in now, it's not going to make a big deal. But let's say we had those same numbers plugged up in here. So let's just say that's back to 10%. Let's say that's 9%. Heck, let's just even say we're still only investing $850. Let's go to 20 years. These numbers might be a little crazy. So with the annual dividend yield, because let's just say we invested back into like the companies that we have. So we're back at 2.285 because we did the higher growth rate. So let's do this annual checkup right over here. So you can see here, as we scroll down towards the bottom here. So your $1.6 million, actually, you know what? Hold on. Real quick, let me pretend like you don't do anything else but reinvest the dividends. So I took out any monthly contributions. So you don't add anything extra to your total. So your first year would be $36,000 because we lowered the dividend yield. So you wouldn't get a lot of money on your money today if you invested $1.6 million. But let's say in 10 years, you are going to be getting $253,000 on your money, and you're estimated to have almost $5 million. So you can see how all of a sudden, year one, you're not getting worth a lot for putting that in. You could probably invest that in other ways and make more. But if you stay the course and have those dividend increases, $253,000 is a lot for you. And then if you go to 20 years from now, you're getting $3.5 million a year in dividends, and your portfolio is worth, give or take, $28 million. That's pretty cool. But what happens is that when when people see those numbers, like we talked about before, then they get discouraged because they're like, well, 4% of my money today is not worth it, or 2.28% of my money is not worth it because I can invest it in other ways and make more. But if I'm playing the long game and in 20 years, I don't want to be working. Let me scroll all the way down here. I don't want to be working for whatever reason. I'll be happy with this. I'll be really happy with this. Obviously, I'd need $1.6 million today to invest. But if we went back to my original amount here, which was 18,000, investing $850 a month, all those same numbers, I'm going to be happy with, $194,000 every year coming in, which is way more than I make today, plus $1.6 million in my portfolio. Like, this is going to be a happy me earning that dividend, having that amount in my portfolio if I needed to, for whatever reason, take it out. But that's staying consistent with, investing in my portfolio, which I got logged out. Making sure that I continue to focus in on my dividends, but not necessarily on the yield. I care about that, growth altogether, because that growth is what really happens when it comes to making sure that I have, the opportunity. This one's a little low, but we saw Lockheed Martin, much higher. We have other companies like Apple. Here, if we look right over here, you can see 10% raise as well too. So if we can stick with companies that maybe have a low yield but have a high growth rate, and also the principal goes up, that's a recipe for success right there for me. That's checks off all the boxes. It gets me where I want to go, and it helps me achieve my financial goals, which hopefully, if you guys are interested in constantly seeing my journey with this, make sure you guys hit the subscribe button down below. That really does help you guys know that I'm releasing new videos. But then you can also check out my next piece of content right over here, so you guys can keep on watching and learning with my portfolio. My name is Dennis, and I'll see you guys in the next video.